Good turnaround Tuesday, everybody. In the shortage of everything market. Hello, Jan and Ryan and Jays.
Morning, mate.
Richard, how are you, buddy? So I saw one thing that stood out to me right here.
Can't see your chart.
Yeah. It's coming up. Okay, can you see it now?
Yeah, bingo.
Okay, so this is what stood out to me yesterday. And, we had a, wild day. Some of the metals came off. So this is the only commodity. And I'd say that the last 2 days have been pretty negative in copper. All right, copper became the new gold. I mean, you find as much action in copper streams on Twitter as you do in gold. Look at the week that we're having here so far. So, I don't know if this is just going to be kind of an aberration in commodities, but it's the only one that's showing signs of topping with this kind of action. And, I don't know why it's not possible to have, maybe a 20% sell off or something, trade back to 350. I know it's premature to declare it, but any ideas? Copper is more about construction, while the precious metals are about destruction, debt, currency. So yeah. I think what's happening here in copper, maybe it's a foreshadowing of what could happen to other commodity markets. Why would copper fall?
Have you seen nickel?
Yeah, that's what I was going to say. I heard you were at the LME bidding everything up, Ryan, and that they locked that actually, stopped trading in nickel
and reversing all the trades as well.
Yeah. Oh, they're doing that too. I mean, this is unprecedented. I mean, I remember the hunts. All they had to do was raise margins. They didn't have to. Well, they did halt trading in silver coin bags. I remember that. I mean, there was a futures contract on that. But I think that's significant. What could you call the euro? A relief bounce here? So far, you could just call it, low relief. It was oversold. I saw Jens Nordvig on CNBC, and Sarah used to trade FX, and they were buddies, and she couldn't get him to commit. All he would say is yes. After a big break like this, it would consolidate. Yeah. Well, that's actionable. So
it stopped going down. I think that's the key here. It stopped going down.
Yeah, but we are getting a nice little reversal in gold. Silver made a new high intraday here today. It missed it right here, but gold was weaker, kind of throwing off the gold silver ratio. No, now it's coming back. So turnaround Tuesday, maybe, copper is saying something. The way I would rank it is yesterday was copper the weakest, followed by silver, and the strength being the gold. So silver looks
You know why silver is off the highs, right?
I don't.
Because remember that that long I took 23.73, I got out at 26.01. I wrote it on chat room this morning.
Oh,
that was only small. Okay, I'm just kidding. It wasn't.
No, it's all right.
Stel's out, pile into shorts.
I thought I heard, something on CNBC about you doing that. So, or
I wish, but it was a good trade. It was a good trade.
Yeah, nice trade. So you got out. So you must think that you could probably buy it cheaper. You get back.
Exactly what I wrote on the chat room. I still have a core long from well below, and I want to add again. I think no, not yet. I think I was looking at 2620 to 2650's big resistance area, so I unloaded there. I'm gonna 24? Wait. Yeah, the 200-day moving average, which is around 24. Yeah, I think we might test that. So it's going to be either that or a convincing break above 2650. I'm going to add there as well. So nice one of the two. One of the two. You have to be patient, really patient with these. But this from 23.73 to 26.01 in what was it? 2 weeks. It's not a bad one.
nice call by Blaker yesterday, even though it took another day for, and gold's still not lower. Looks like a false breakout in Aussie if you use Steve's channel lines here. So, and it was a nice channel, right? And, if it broke out and followed through, it had that kind of measurement. But that's a negative. I was actually looking at Euro Aussie and, to buy it, but I couldn't do it because all the RSI stuff was, ugly.
Well, I'll tell you what, Dale, I didn't catch the bottom, but my cost average is at 147.10.
Nice.
And we were picking it up Sunday in the chat rooms. So, we've already started longs. Now I'm probably like everybody else. I'm just trading pretty small. But, last week, I think I took on this particular pair, I think I took like a 70 or 80 pip loss on the same size. So, even though I'm up 258 pips in this trade right now, it's not a huge position. So it's not like something I'm going to be like, woo, I'm going to Aruba on vacation after this one. This is more of a, just kind of chipping away while you got the volatility there. So,
like
but you were pointing
reversion.
out, what's that?
Like a mean reversion trade.
Yeah.
There was no divergence
and I actually
or anything.
plan on sticking around too long. Actually, I think here, let me go ahead. I was just actually looking at the Aussie Canadian as well, just because this is one that I talked about last night on the trade off. We did the Pepperstone show a little earlier than normal because Chris Weston was heading out of town. So I was looking at just what to be doing with the Aussie. But here's the Aussie, as you pointed out, as a failure. So let me just reset this really quick.
Everyone has Steve's trend line.
Yeah, this is the descending trend line. And that was coming in right at the 200-day moving average. We went above it.
Yeah.
We slapped back below it, and we're back below the breakout point too, just on a horizontal basis. So yeah, I mean, if you're bullish to Aussie, you're probably getting a little concerned right now, especially if you're positioned poorly, around the 74 cent level, or, trying to trade a breakout. It's a scary thing because it's not just the Aussie dollar. It's, you look at the Euro Aussie and you're seeing a hell of a bounce here. And just so you guys know, this is a weekly, and I know I talked about this on the week ahead video, I think. Anyway, this is a weekly 2012 to 2020 range. It's a 618 retracement. This is the whole reason why I started buying this thing last week, on Sunday, is we are at it's a big 618 retracement of literally about 10 years. Now, that doesn't mean that I'm going to stick around till it gets back to 170. I think this will be lucky if we make it back to the low 150s, 151, 152. But, that's kind of what's happening right now. And, it's not just the Aussie, it's also copper. If you watch copper yesterday,
I talked about it.
Yeah. Well, we were, trying to break out, false breakout, and that false breakout led us to believe that the Aussie wasn't going to follow through either. So, one of the other Aussie pairs that you might want to pay really close attention to, since we're on the topic of Aussies, take a look at the Aussie New Zealand. Now, this is one that I've had a short on for, well, you can see when I really established that was March 14th. So about 3 weeks ago. I've been looking for this, this butterfly pattern to really take hold. And actually what we ended up doing is retesting that same high, the 108 level, but now that's a double top. So you can see the double top, we're at the neckline right now. A breakdown actually takes us back to 105 and change. So like 105 and a quarter. So I actually just took some profits off of the Aussie New Zealand this morning as we were here at 60, but I don't mind adding back to it either, as long as I know that this is, going to be playing out as a double top. I'll add to it, on the approach to the 200-day moving average again. So, this is a nice setup. So again, it's not just like, if you're looking at the Aussie dollar, it's not just the Aussie dollar. There's Aussie against a lot of different crosses are showing some weakness here. So anyway, that's kind of what I'm looking at today. So how about you guys? What's on the radar for today for you all? It's been like a kind of a low volatility environment today. That's why I woke up to thinking, wow, it wasn't all crazy in Europe. How do you guys feel about the markets right here?
It looks like a little bit of a pause at the moment. Say euro dollar's not really doing much. It's stopped going down, but it's still struggling to get up and above 109 and hold above there and push on.
Yeah.
But we're seeing other euro pairs, trying to claw some way back. Euro Swiss, Euro Yen, Euro Sterling, they're all sort of trying to grind up a bit. And euro dollar's the laggard at the moment, and cable's in the same position. Dollar yen's up. So
Euro pound's up.
Bit of a dollar story perhaps coming in now. Dollar yen looks like it's on an absolute one of its grinds where it just keeps going up and up and up and up slowly.
This dollar yen really looks squeezable, right? I mean, this is like that one that I'm really worried that I was going to try to short it at 117, but at that multi-decade trend line. But man, we are just wedging up here, and I'm wondering if this thing's just going to start creaming higher at some point.
It's possible.
Yep.
It's possible.
You guys know what I'm actually no. Carry on with the yen, and I'll tell you another thought that I have. Carry on.
Well, I'm interested to hear what K-Man has to say if he's back today. Not sure if he's.
Good morning, everybody.
Oh, good morning, K-Man. So, what do you feel about this dollar yen just holding at these levels?
Yeah, it's there's two things. The energy costs ramping higher. Yen is Japan is a big importer, and then overnight also what came out is a deeper current account deficit, and current account deficit is usually not very good for a currency. And the last thing is what I've been saying already. We are March, last month of the fiscal year. And it's not rare that we are doing tops in the dollar yen come the end of the fiscal year. So there's three things that are working against the yen right now. I think the major one are the energy costs, right? The import costs of everything, since Japan is such a big importer, and also the Japanese companies. There are quite a few companies Japanese companies established in Ukraine, even in Russia, and they're suffering for the moment. So Japan is relatively speaking at bigger risk than other ones that have benefited from this whole situation. So I think that's why it's the yen is under the cosh, especially versus dollar, right? The rest is euro yen is still quite a bit lower than where we were before the whole thing started, right? Euro yen is down went down like 7-8 big figures in the process, right? With the euro coming off.
Yeah. I mean, the euro yen took absolutely clobbered. Yeah.
We're rather looking at dollar yen or commodity versus yen who have held up really, really, really well, like the Kiwi and the Aussie. And the other one, since yesterday I missed all of it. But if you look at the moves that we saw over the weekend, if we would be in normal times, these are typically end of trend accelerations, right? Whether you have it in Euro Aussie, Euro Kiwi, the Kiwi dollar, Aussie dollar, they went like spiking and then violently reversed. They look like really end of trend moves, but of course we can't call the end of any trend right now because we are still in the middle of the Russian-Ukraine situation. We don't know what's going to happen once the humanitarian corridors are closed again. So it's a bit hard to call for the end of all those moves, but they have come a long way, and the accelerations that we saw could technically mean that we are in the end of trends.
Yeah, and it does. And I mean, you're right. This is not normal time, so it's hard to, go out there and
especially those moves happen in early Asian time, right?
Right. You know what else? Just
Guys,
going back.
sorry to interrupt. By the way, Biden, I don't know if you saw the headline a few minutes ago, to ban imports of Russian oil, LNG, and coal as soon as today. So that's without the Europeans agreeing and everything. So that's pushing a little bit the market. Sorry to interrupt.
Oh no!
Right.
And look at crude oil. I mean, we are trading at levels we have not seen since 2008. And from the looks of it, gas prices here in the U.S. are exceeding levels that we saw back then at this stage. I mean, at what point? And I posed this question to Chris Weston. At what point does inflation kill inflation? I mean, where do we get to the point where
demand destruction?
It's demand destruction, and
you have to get a proper recession.
I mean, look, we got high inflation, and it tips us into slow or low growth, and next thing you know, it's stagflation, right? We have to start talking stagflation. And stagflation is a very nasty environment to be in. So, what do you guys think here with crude? I mean, we got to do something. I mean, and is that putting together,
Iran and Venezuela, basically.
Iran, Venezuela. Is it Argentina as well? I mean.
Well, I don't
is
know.
Argentina one of the countries that are in discussions to start importing? Anyway,
I mean, they have a lot of oil there. I think Brazil has some oil.
Venezuela is the one.
Yeah.
Is okay? Because I was going to say at some point we can start buying the Argentinian peso because it can't go any lower. It's just not possible.
Famous last words, yeah.
It can't, right? Right. That's the famous last words of all traders. No, this is the low. It can't go any lower. Yeah, sure. So anyway, one of the other things I wanted to point out with the euro dollar that if you guys, we talked about it on the week ahead video. I had one of our longtime listeners had mentioned to me, oh no, his name's Dollar Bill, and he's in our chat room, guys. And I'm just going to show you guys. This is our chat room, just so you all know, what our chat room's like. I mean, we're talking about this is just the general chat room, right?
Oh, he's on the billionaire. Dollar Bill.
So, this is when I got up this morning. So you can see I got up right, and this is only an hour and 15 minutes ago or half ago when I got in here. That's me. And this is all the chatting just in the general chat room. That's not all the other chat rooms, right? So that's just the general chat room. Then you have our trades room where, we talk about the positions we're in. This is, my positioning right here. The macro flowonomics room where, this is Ryan and, his team and where everybody's chatting. Spanish chat room, news and research where, everybody posts kind of like news articles they come up with or, files that they've gotten from banks or traders or funds or whatever. And then, all of our little side discussions. And in our chat room, one of the cool things about that is, we don't let anybody direct message each other. Because for a lot of reasons, right? Well, the main one is because we don't want people selling other people oh, hey, I can teach you how to trade and blah, blah, blah. No, everything's out in the open. So you always know you can be there and have a safe place to be. And we don't talk politics and religion and, and try to keep it just trading related and Netflix when we're all bored. But I had one of our guys that Bill, and he's in California. He's probably listening in right now. He might be because I don't know if he gets up this early. But anyway, he noted yesterday. He goes, "Oh, the euro's on a big weekly trend line." I'm like, "Wait a second. That means if you're just now figuring this out, that means you did not listen to the week ahead video that's free. The team does every week. And so this is a really major level in the euro dollar. And the reason why I point that out is because yesterday we pushed below it Here, let's every once in a while or every night, my trend lines kind of get a little cattywampus there. You can see we broke the trend line on a weekly basis, and we are back above it. My opinion is if the euro dollar closes above 109 or better, let's just, and especially like 109.50 or even closer to 110, that's going to be a false break of this. This is since the creation of the euro. That is major support. This is, it's defining for the euro currency. And it's something that, like I said, we pointed out on the week ahead video over the weekend. And so I think you got to watch the euro here. A low here would also keep the euro from creating a lower low. We create a higher low, and holding major weekly trend lines, I think, is very, very important for this single currency. So, and I have to admit, if the euro can go through what we've seen in the Russia-Ukraine conflict and kind of come away unscathed. When I say unscathed, I mean, yeah, we're down a few hundred pips, but really, in the grand scheme of things, it's still well above parity. There's something to be said for that. What do you guys have any thoughts on the euro here?
It's a good question. It's basically, I think it's a binary thing now. Like you said, we either move off the trend line or we're going to visit 107. And on the other hand, the euro it did have a correlation with stocks, with the DAX. That's kind of broken down recently, but it will depend on the energy crisis, which is affecting Europe more than anything.
Speaking of the DAX, holy cow, it looks crap.
I wanted to talk about that. What did we say yesterday? Right here, DAX was at 13,000. I was saying, I think we should be selling rallies, and I'm going to say the same thing again today. And if you had sold that, I think it went down 400 points after that, or something like that. I think if you look at the 1 hour chart, you have these highs at 13,100 or somewhere like that. There you go, 13,100, something like that, and that also 13,115, I think, is the 38.2 retracement from the COVID lows to the all-time highs. So that is a pretty powerful level. There you go. Where I put my order in to sell 13,000 with a stop at 13,150.
Well, and so this is and it's actually the 200-week moving average, which yes. I'm not. I'm just noting there. But here's the flip side to that, Stelios. If we break back above, let's just call it 13,200-300, somewhere up here, do you really want to be short anymore?
No, that's why I said I put my order. It's already there, 13,000 and 13,150. I stop.
Got it. All right. Well,
nice there you go. Tight stop, and I like that.
Okay, that makes a lot of sense. And I mean, the DAX is really, as you're pointing out here, it's really been underperforming. But I do want to point out a couple other things about the U.S. equity markets really quick. And then, we'll get some final comments from you guys before we wrap up here. But you guys know, this is the S&P chart I've been looking at for a long time. And, I actually think that this head and shoulder pattern might still actually be developing. And the only reason why I want to say that I think it's still possible is the reason why we're lower is not any other reason but what's happening in the Russia-Ukraine situation is what actually pushed us below what I had previously considered as a neckline. Theoretically, we could do something like this, or you can say maybe this is a complex head and shoulder pattern, which is possible. I still think that we can be consolidating. I haven't ruled out that this is not going to work. What you see here in the S&P is actually a higher low as of today. Now, today is Tuesday. Dale's famous for Turnaround Tuesday. So, I mean, for at least singing it and saying it. So we do have, Tuesday, we're trying to create a higher low. Same with the NASDAQ, higher low, Dow, higher low. So the reason why I point that out is if we can maintain the lows today and close off of them, I don't know if I'd want to be short U.S. equities at this point. At least not at these levels. As you guys probably know, if you've listened to me for any extended period of time, you know I do want to sell rallies in the S&P. I do want to be short closer to the 200-day moving average. I'm just hoping we get there. You know, and I really think it's going to be more of a, you know, ceasefire is called, maybe a, you know, de-escalation. Creates a little bit of buying pressure, yields start to rally, and yields are ultimately what's going to make this market roll back over. Because any which way we slice it, guys, we are facing a Federal Reserve who is going to be fighting inflation and raising rates in the face of everything that we're dealing with, whether you like it or we like it or not. This is the Fed not having our back as buyers this time around. So I do want to sell rallies. And any final thoughts here for you guys? And while I'm getting final thoughts from you guys, let me go ahead and just put in, this is the Trader Funding Program. Make sure you guys check this out. I'm going to put it in the chat box for everybody. We have multiple traders that have passed the assessment over the last 2 weeks that are now accessing larger trading accounts. You have a one-time assessment fee. You also get ForexAnalytix Premium for a certain period of time while you're in your assessment, and you can see, you know, all the prerequisites and everything are right here. But if you want a little bit more about it, make sure you watch the video down at the bottom. There's myself in my office. Watch a little video of that and learn about the Trader Funding Program. It's really we're finding it's a really great alternative for a lot of traders. Well, you know, people get to, you know, it's like, you know, like if you have a chunk of money and you're like, I want to trade, but in these uncertain times, I don't want to put all my money into the markets. I'd rather use somebody else's money. And so, but I think I can trade pretty well. It's a great alternative for people. And so anyway, check it out. But let's get you guys' thoughts on the markets, and I'm talking, you know, whatever you guys are feeling right now. And I just gave you my final thoughts on the S&P. Let's start off with Ryan. What are you thinking here?
Just looking at the euro, I think it could be a case of this one's on the clock. If we don't break below 108, if we manage to hold these levels, then that's potentially a sign that the market's priced as much as it can for the Ukraine stuff, headlines permitting, and we might have some semblance of a bottom in play. Don't also rule out the ECB on Thursday. Policy-wise, it should be a dud, but I've had a bit of a change of thinking about central banks broadly, which I put in the room earlier.
Okay.
I think they could be forced to be going to indicate they're going to go harder and faster, because they're not looking. You know, we were talking about inflation yesterday. They're not looking at inflation for February. They're looking at what this Ukraine situation is going to bring in the next 3 to 6 months.
Which is probably going to bring some really serious food issues for the Eurozone.
You know, they're not going to care about 5, 6, 7% inflation this month. They're going to be wondering about 10, 15% inflation in 3 to 6 months. And that's what's going to get their attention, as well as keeping financial order in markets.
That is a great comment. So you guys in the chat room, if you guys are ForexAnalytix subscribers, make sure you go back and listen to read Ryan's full thoughts on that.
Just quickly to that end, I think there's a strong risk that the Fed goes 50 at this meeting because of that.
You know what? And here's the thing. I was talking to Chris Weston about that last night, and you know, we do have CPI tomorrow. And you know, if it's hot, I think a lot of people are going to start tilting that way, and so that's something to think about. Steve, we have like 1 minute left. I just heard your voice. What do you have any thoughts within a minute?
I've said the same thing multiple times. I just added to what Ryan said. He said you guys said about food, and I added that, you know, the biggest pain is going to be, as always, energy prices, because energy prices unfortunately spill over to practically every single product out there, right? Because every single product has either as an input energy, or as transportation, or in most cases both.
Yeah.
Great point.
Yeah. All right. And yeah, great point. K-Man, do you have any last minute ideas here? I know we just got.
I was looking at it earlier as well at your trend line, but then if you take the 2017 lows, the trend line comes in around 108.15 on the euro dollar, and that held. So I'm looking at the 108 as a measure, as a yardstick for the euro dollar right now.
All right, 108 as a yardstick. I like it.
DSI was 5.
Stelios, you have any last minute?
No, I said what I wanted to say. Good luck, everybody.
Good. All right, Dale, do you have any last minute ideas?
Yeah, DSI was 5 on euro.
I don't
think I've ever seen it there.
Let's add to that. It was DSI was on 5 on Friday and Monday.
Oh wow.
Yeah.
Okay.
Yeah. And Blake, I agree on that as well. I think the risks here ahead of the ECB are clearly tilted. Not to be short euro where we currently are. I mean, there is no risk reward that makes any sense to be in the downside.
All right. Well, so you got Dale, you got an interview coming up. Make sure you guys check out ForexAnalytix, check out the Trader Funding Program. Thanks everybody for being here and supporting us. Really appreciate it. And have a great interview, Dale and team. I'll see you guys on the Morning Edge in 45 minutes for the ForexAnalytix peeps. See you there.
Cheers, guys.
Thank you, team. Great stuff.
Bye-bye.
Bruce Fraser, R.D. Wickoff, welcome back to F.A.C.E. How are you, Bruce?
Dale, can you hear me?
I can hear you. I'm glad to hear a calm voice. You always have one. So, Bruce, your demeanor doesn't change, peace or wartime. So, Fed tightening or Fed easing. What's on your radar in these unprecedented times? I've never traded a market like this, Bruce. How about you?
Well, 40 years of this, and they all seem different to me. So, yeah. So anyway, let me.
I mean, I don't even think that this is the 70s on steroids. If you're, want to go back then, and that and everything was so much different then. This is, something that, a superpower. So there have been conflicts in the world over our career, Bruce, but not with potentially a superpower like this with Russia. So,
it's tragic. War is always tragic, and then of course I was around in the 70s and experienced all that as a youth, but I was in my career, and so it was a very interesting time, and so there were a lot of similarities. A lot of things were similar, and so here, our little guy here is that. This is a cartoon from the 1907 crash.
Oh wow!
I believe it was then, and you can see Mr. Wall Street here is got an ice block on his head, and his feet are in some hot Epsom salts, and he's got elixirs and so on, and so you can see
they had good elixirs back then.
Yeah, they were better then. Yeah, they were better.
And is his face a pig? Like bulls and bears make money and pigs don't?
I think I think Mr. Wall Street he might wish at that time that he was one. Yeah.
Yeah.
But here, this is a very old cartoon, and the bulls are running this investor up to the peak and over the top. And so that's kind of what I want to talk about today is this whole concept of Wyckoff distribution. And I have some kind of an odd collection of slides that might also help us to, get to the bottom of this whole inflation thing, and not to the bottom of it, but maybe understand it a little better. And with your permission, I'd like to do that. And,
you're the guest, so you're the boss.
Well, I know, but it's
always
good to be here. Yeah, I love being here with you.
Well, thank you, Bruce.
And so here here is this just basic price cycle. We're all familiar with it. And the whole notion of it was, and Mr. Wyckoff wrote about this and talked about this back 100 years ago. And this was the idea of the cycles of accumulation, distribution, and over again. What I'd like to make a point of today, because we're all familiar with this, is that the reason that we get markups, is what we call them, is because we have a process that occurs called accumulation that creates the conditions where a markup can occur. And then after that, there's a period of distribution that creates the conditions for markdown. And so this is something that we work on the price charts and on the point and figure charts. I'm actually going to do a lot of point and figure charts today, if given the time that we have. And so here is me. This is a fuzzy old chart, and I actually found a better one. I'm going to upgrade it, of this that Roman did. And Roman is one of my teaching partners at Golden Gate. I don't teach anymore at Golden Gate, but I do write a blog at stockcharts.com, which is available to everyone. So I'll show you how to get there. Well, here it's, let's go back.
So the biggest mistake, don't you think, is that when you're turning a battleship around, like this recent top in the market may have started, I mean, there were undercurrents and stocks already breaking down before the averages rolled over. And that distribution phases, the stronger the bull market, the longer it would take to distribute and turn around the battleship, just like accumulation.
Absolutely. I think that's an excellent way to describe it. It's a good analogy. And so, like, the bigger the accumulation, the potential for a much bigger markup, bigger the distribution, the much bigger the markdown can be. And also keep in mind that distributions can occur much quicker than accumulations. And the reason for that is because there's a tremendous amount of volatility that occurs and volatility is the condition here that causes, which is evidence, let's say, of stock changing hands. Because there's a phenomenon occurring in distribution, and that is that stocks changing hands from strong holders to weak holders. And the reason you can get marked down is because the stock is in weak hands. And so who are strong hands? Strong hands are what we call, it's really, we call it the composite operator, which are the super large, very well informed, very shrewd investors that are out there. Most of them are institutional types. It can be hedge funds, it can be institutions, they can be individuals. It's their conduct that counts more than than how we would characterize them. Not all institutions are composite operators. And so composite operators are thus because of their skill sets. And so they build very large positions and they hold them for the duration. So here are schematics. We use schematics for a lot of things in Wyckoff, and uptrends, downtrends, accumulation, distribution. We actually did an accumulation kind of workshop here a long time ago, over a year ago. So I thought it might be appropriate to do some distribution.
I have one question, Bruce, if I could ask you about the distribution phase. You know, for months we had vicious sector rotation, the move from one sector to another that kept the market alive, that type of rotation. So could that be part of a distribution phase that, if we ever get this again, that when we see this type of rotation supporting the market, that's also part of the distribution phase?
So, absolutely. And the thing that's happening in distribution is that these CO types are disgorging their large holdings, and they have to do it carefully, stealthily. And so they're very shrewd about how they do it, and they do it into strong markets, into momentum. And so they will rotate into other areas of the market. Part of what that does is it helps to prop up the indexes. And so, they say that a bear market is like a thief in the night. They come when you don't expect them, which is what distribution is. And so you pointed out that you can have stocks that are under distribution for a long period of time, long before it shows up in the indexes. And so what's happening is that stock is being distributed, and then it's being redeployed, some of it into areas of the market where the market can then be held up, or it tends to hold up. And there's an old saying, an old Wall Street adage, that beware when the generals march alone.
Yeah.
And what that meant was that the generals in the old days were General Motors, General Electric, General Reed, and not just those,
50.
IBM. Yes, and what they did is they would drive money into the most conservative areas of the market, and that would tend to give those stocks lift, keep the broad indexes alive, while they were quietly removing money from the areas that they were no longer campaigning. And so here I just
giving tips to congressmen and Fed officials.
Yeah, well, yes, we know.
All right.
We know that happens. So here I put references to some of the blogs. You can go see these blogs. Like I said, they're absolutely free, not behind a paywall, at stockcharts.com. And you'll see that there's a zillion of them that I've written on these different white coffee and topics. Now here you can see, here's the NASDAQ 100 on the left, the S&P on the right. And you can see here that the distribution characteristics are being, we use these terms, these abbreviations, to define these different places in the market. And so what these are, though, is that these are phases of distribution. And one of the characteristics of distribution is that it becomes more volatile as you go through distribution, because stock is getting into weaker and weaker hands, and it's not being supported well by the large interests. Part of what creates accumulation is that large interests are supporting those stocks at value levels, and so that tends to take the volatility out of them. And so at tops, you get the opposite condition. And so volatility increases. That's the reason why point figure is a function of volatility, and that distributional point figures can form very quickly. Now here's the S&P 500. Now notice the difference. There's a little subtle difference here I want to point out. Both of them have very similar characteristics. So here's these classic distribution structures. People call them, have been calling this head and shoulders. It's an excellent description. We tend to look at it a little differently because we break these segments down, these areas, into phases. And you can see here that something very important in our work is to see a sign of weakness, which is an important break. Look at the volatility here. It's a massive change in character in the way that the NASDAQ is acting. This was an interesting change of character here, and was actually of greater degree, or let's call it greater intensity, than even this one. And look at the volatility expand with higher volume. And so volume is coming in on declines. That's a sign of stock being sold in large quantities. What tends to happen in bull markets and also in accumulations is volume tends to dry up as stocks are pulling back, and that shows absorption. So here, look at this. The S&P, which is where the more blue, call them the more blue chip names are. Think of that comment about the generals marching. This had an upthrusting action after the buying climax, which was this acceleration into the top of the trend channel. Here you had this acceleration early November, did not get an upthrust, but you got a test of the buying climax peak. Here you got an upthrust, slight sign, very subtle sign, and we're always looking for those in Wyckoff, of more strength in the S&P than in the NASDAQ 100. NASDAQ 100 had always been the stronger index in this bull market.
Amazon didn't make a high, had not made a new high, didn't even make a new high. I think it peaked in November.
There you go.
Everything else was marching.
Very good point. And so,
can I ask one question? Of
course.
We have an attendee who's most likely a Forex trader. And can these patterns be applied to other asset classes, these principles?
Oh, I think all asset classes that trade in an auction style. Okay. Because one thing I've noticed is Bitcoin. Bitcoin really seems to follow these principles. Bitcoin works really well on a point and figure basis, and definitely commodities. I have a number of commodities that I'll probably run out of time, but I would show them to you. But here are these two schematics I showed earlier. Note how the schematic number 2 is very close to what happened in the NASDAQ 100. Schematic number 1 with this upthrusting action is very similar to what happened in the S&P. Now, what's unusual is both of these happened at the same time in 2 different indexes. We don't always get that characteristic, and so it's interesting to compare and contrast. So now the other thing that's happened is that we've broken the strides of these uptrending channels. And so that's very, very important also. And note the rally in the NASDAQ 100 here could not, that's called the last point of supply. This rally could not get back to the lower trend line, where on the S&P it did. So, and could not rally to old resistance, new support, and where the S&P did. And so you can see here that there are definitely commonalities. The other thing I was asking, I wrote this in a blog and did it in some of my videos, which are also on stock charts, is that I was looking for a rally off this low because I had some point and figures hit. And this rally, I was saying the quality of this rally is going to be really important. So far, the quality is not great. Now, that doesn't mean that we notice how this rally is failed more quickly than this rally. We're always looking for these compare and contrast relationships.
Smaller magnitude. Let me ask you this. It would be a guess for you because we're not there yet. I look at things like threes, and you had your first low at 42 and then 41.20. If we flush to one more low, does that build the case for accumulation if you get a reversal after we take out the low at 41.20 that we put in a week or so ago on the invasion? Or would we have to go longer period of time since we just came out of distribution and we're still in the markdown phase?
Well, yes, I'm always of the mind that we'll always build a cause. Now, but before we get a move, this was a cause. See this right here? That was a cause, and that produced this rally. Right. And we get those. I have a couple of examples if we can get to them. But here, this is a selling climax of sorts below support. Right. And I would automatically, I would automatically draw a trend line across that low. And so that becomes an important support area. And notice that's where we are now. Right. So this low from yesterday is really testing the 41.25 area, the 41.20 area that you're talking about.
Yeah.
And so this could be, Dale, some kind of an accumulation structure that's starting to develop. I'm very cognizant of that. But the other thing that I would be doing is I would be starting to think about point and figure analysis for the potential for how much could this go up. And then the other thing that I'm asking is there the cause in my point and figure counting, and it's called horizontal point and figure counting. I've written a lot about it. Have we fulfilled those counts yet? And so that's also important. And so you can see here, and I'll just leave this for everybody to look at, but you can see the characteristics. Now, some people might say that this is the buying climax over here. on these, and I would not argue with that because they both have really similar purposes: preliminary supply and a buying climax. But so anyway, I make that point. But let's move on, because now let's get in a little bit into point and figure. And so this is the triple Qs as a surrogate for the NASDAQ 100. And so you can see here are these little accumulation structures that we were just talking about, Dale. And so one of those could very well be forming in here. And this was in late 2020. And look at how this is just what I call a swing trading accumulation structure. And a 5-point scale, these are each 5 points. And then one box reversal method, which is a shorter term swing trading kind of a count method. So this count beautifully went up into the range of this high, which also was the top of the trend channel. Well, it actually set the trend channel, because this is what we call supply line. Then we had a second one that counted up to here. Well, interestingly, this count, this reaccumulation count, reconfirmed this one, which is really interesting, because often when you get reconfirming counts and you don't have higher counts at higher levels, that tells you that you're exhausting the move of the channel. We have a throw over at the end, overbought, fulfilled 2-point figure counts. What happens next? Yeah. So here's what happened next. And so we came back into the channel. Often when we reverse down into the channel, we get a lot of volatility. And this is the distribution structure that we talked about on the vertical chart. So
I like how you did that. That was pretty slick.
Well, it's really just because I'm lazy. I don't want to mark up a new chart.
Yeah, you had an insert ready. That was pretty good. All right, go ahead.
So, but look here. Now we ask the question: have we fulfilled a count? Now this is on the Qs, which would be similar to the NASDAQ 100. But this little swing trading count up here counted down to this area, and look, we're stopping here.
Yeah.
Yeah. So this is really fascinating. My concern now, again, I am now definitely on the alert for the evidence that says we're completing some kind of a structure, either for a redistribution, or we may be creating some kind of a structure for a possible swing trading accumulation. And so it's a little too early to tell. There's some things we need to see in the charts to help us determine that. And also the other thing I would say as a caveat is that this area here could very well be a larger distribution count. And so we need to just be super aware that we have now broken our stride. The one thing I would say, and I heard some great comments about the Fed as we were just getting ready to start, and that is that Fed hasn't started to raise rates yet. And it doesn't appear that they've started to expand their balance sheet. So I'm not a fundamentalist by any means. I'm not a Fed watcher, but I have studied the past histories of rate increases in the market, and usually it takes a few rate increases to stop a bull market. And so I'm just
2 steps and a stumble.
Yeah, that's a great old term, and also
of course it's old.
Yeah, well,
it came from me.
Yeah, the last I think it was in the 05-06 period. I think it took like 6 rate increase events to really stop the run, and I think it was then, and prior ones similar, and so it can take a while, and rates haven't even officially started going up yet. So
we could have another run in the market, even though the Fed is hiking for a while, that the market adjusts to it and we get a run. I mean, there are a lot of areas in the market that are great inflation hedges.
Exactly. And so it's exactly right. And also, until they get interest rates up to the level of inflation, which is what Paul Volcker did,
they won't do that. Do you?
I don't think they can ever do it. Yeah, I don't think
that's what possible.
I mean. Yeah. So I think we have, what, about 5 minutes left?
Yeah.
Let me cherry pick this is just a swing trading chart. I showed to you as a way to plot and chart intraday point and figure. And you can see here how I tend to do that. This is the early 2021 February to March accumulation structure. Look at it, counted right up to the highs. And the bigger count, the larger count. So it's just like these things are great. Now here's the Dow monthly. So this goes back to 2011. Look at this beautiful trend channel that we've been in the Dow. I love to look at the Dow, even though it's really old school. But so throw over here, stops the advance, becomes range bound mostly. And then look what happened when it had a final touch and went into the channel. Became super volatile in 2020, became super volatile in late 2018. And then here we have this really epic run from the COVID low. Epic above the channel. But look at how it rode on the top of the channel. And now we're back into it. And so I'm a perpetual bull. I want to see it run back up and be able to rally to or back through the top of this overhanging supply line. But volatility does happen once you get back into the channel. So we have to be really aware of that. And this looks an awful lot like a potential distribution too. So we just got to be super careful. And
I want to ask
just
you, be careful is a good thing to do all the time. In the markets. I just want to ask you, Bruce, we've had parabolic moves in a lot of commodity markets in the markup phase still.
Sure.
Some haven't topped. We may have gotten the top in copper this week. So with this type of markup phase that I don't think have seen in a long time, would you expect a very long distribution phase in commodities for them to even correct?
Yes, and also one thing that I've done here recently, I just want to show you, this is a chart I made back in January of 2021 and had been showing it in my videos and in our Wyckoff classes. And this is the count lines at 35, counts up 85, 112. Not uncommon to throw over the top of a count, especially if it's in a super bull run. You can see this climactic surge here, and that's occurred, which is this is through March 4th, and so this could be climactic, and also it's into a count objective. That why Wyckofians love that. Now I would not step in the way of this. I would wait for a cause. Look at this, crude.
Wait for a failing rally, a break, and then a failing rally.
Crude is an amazing commodity for point and figure analysis, and I've gone back and studied crude cycle after cycle, and the counts are just remarkably good. This gives me some hope, actually, from a geopolitical point of view, that maybe we've had a climactic surge. Maybe we can at least stop and go into a range bound condition. Maybe it's reaccumulation. Maybe it's not. I suspect we would be in this for a long time. And then before we can have another big move, I would not be trading on this yet. I think it's too early. But let me just show you one other example, and there's just a bunch of them. Let's not do nat gas, but look at this count goes back to 2009. I mean, this is crazy stuff. And these are just really for illustration, because I want to make the point that, look at copper here. Around 504, I think was the last I saw it, and it sort of calmed down some. But look at the structure. We talked about big accumulations, big causes. Well, if this is accumulation and it's trying to get up and out of the structure, this all means that copper is tightly held in short supply, and that it could be very difficult to get for manufacturing appropriate.
So point figure targets are $24 up in that range.
If this thing bears out, I'm not saying it will. And so I'm just showing this and saying, beware, because look how long this has been trading in this tight little trading range. And so it's pretty nutty, but I would just be super cautious about breaking out of, like, here. Maybe it's not going to break out. Maybe it's just going to hang here for a long time and just trade in this area. I would love that. I don't want to see these commodities take off. Nobody ever calls me and asks me, but here's silver.
So I mean, okay, yeah,
Just
go ahead. So
it's just all it is, and we'll button it up here.
no, that's
But
good.
this is 2020, the COVID low, back to 2014 in silver. And look at these counts, and silver came up and out. It's been consolidating, and these are just counts. I mean, it's like, I'm not predicting anything. I'm just counting these structures. And I let the market tell me where to go. I don't, I figured out that I'm just not very smart, and that it's better for me to let the market, the tape, tell me where it wants to go. And I just go. So here's the silver miners. And so these counts are, really substantial. And look at this. This is a structure that goes all the way back to 2012. And so these are, they're large, and I would just be very respectful as a risk manager of this phenomenon. And I've just got bunches of these commodity markets that have similar looks to this. Coffee market, cotton. Cotton's already running, and wheat. On and on and on. And I guess maybe the last one I'll leave you with here is here's gold. And so you can see, I actually wrote a blog. I write blogs on this, and I wrote a blog at this low in August of 18. So just go to my blog site to read it. And you can also get this chart. But look at this. So this is what we've been doing since mid 2020. We've been building what looks like another cause. It's now over a year and a half in duration, on top of a bigger one here. And so there's just cause on top of cause in the gold market. And now look where it is.
What's your
trying
point figure target on gold?
Gosh, it's like you're just ahead of me. And so now I haven't counted this area yet for publication. So, but now that it's up against resistance, the count very well could be near completion. Might pause here for a while, but here is the structure. Now I'm just using GLD for this, not gold, which is this continuous contract monthly up top. GLD, I'm just counting this area here. And these are counts that I get on GLD. And this is where we are right now, or we were as of, I guess, yesterday.
Bruce, great presentation.
It's so great to be with you. And thank you so much for inviting me.
It's like going back in a time machine to talk to a guy like you, and your demeanor's great. And, I'm glad you're doing so well on stockcharts.com. And besides your website, where would be the best place to follow your work? People that hear you now and watch this later.
Yeah, read my blogs. There's a lot of good educational content on Wyckoff. Taught Wyckoff in graduate program at GGU for 27 years with Hank Pruden. So I've tried to put a lot of those lessons into the blogs I've written. And then also I do videos, weekly videos for stock charts. And those are all Wyckoff oriented, or mostly. And then finally, you can go to WyckoffAnalytix.com, Ramon's website, and there's a lot of great Wyckoff content there.
Thank you, my trading warrior brother.
All right. Thank you. And thanks to everyone for attending.
Yeah, and thank you for edifying the F.A.C.E community once again. You're giving spirit to do it, and, give us your time, Bruce. We appreciate it. So thank you very much.
Thank you. And hope to see you all again.
You will. We will, hopefully, if we're not, glowing. Anyway, everybody, follow Bruce and follow him on Twitter at RD Wyckoff. Bruce Fraser, thank you again. Really appreciate it. We'll set up a time to talk to you this summer.
Terrific. Thank you, Dale.
All
Be
right,
well.
Bruce.
Take care, everyone.
All right, so that's a wrap, everyone. You could meet the team in 11 minutes on the Morning Edge, and thank you for your attention. Don't just count your X's and O's, count your blessings, and I'll see you tomorrow. Adios. You're welcome, Jane. You're welcome, Richard. Bruce is one of the best. Adios.